What's up, money lovers? This is Vinny from the Investment Club. Welcome back. It's been a few days. Work has been crazy, but I want to stick to my schedule here and get out at least 2 videos a week, ideally more. And we've got a lot of exciting topics coming soon. I'm going to be interviewing a financial advisor. I want to do a video on the election cycle and what you should do with your investments. So definitely go smash that subscribe button. Ready? 5, 4, 3, 2, 1. Great job, everyone. And you're not going to want to miss this. Where do you get started with investing? There are more options now than ever. You can do it independently through a bank or a brokerage. Some popular brokerages include Fidelity, Robinhood, and Vanguard, which I'm going to do an analysis of today. These are 3 brokerages that I use currently or have used in the past. And my goal today is to help you determine which one may be the best choice for you. And if you're a beginning investor, you're in the right place. Subscribe so that you can catch the rest of this series where I'm going to break down step by step how to get started investing and help you make the right investments to suit your goals. For one here, we've got Vanguard, which each of these brokerages definitely have their pros and cons. So this article from NerdWallet pretty much hit the nail on the head. So Vanguard is definitely a solid platform. It's got a lot of pros, and there are a couple cons that I'm going to touch more on later. You can invest with a $0 minimum, but there can be some catches. Vanguard is synonymous with low-cost investing. They have a great reputation for having low expense ratios, which means if you invest in their funds, you don't pay high management fees as opposed to some mutual funds. They have over 3,100 mutual funds to choose from. They actually just got rid of their commission fees in 2019. It used to be $7, and now it's $0, so this can help you save a lot of money. The site is definitely built for a long-term investor. It's built best for a pretty passive approach where you kind of just put your money into the index funds and you don't check it constantly. You kind of just forget it's there and check back maybe in a few years and see how much money your money has made for you. Now, some accounts you do need an account minimum that can range from anywhere to $1,000 to $3,000. So this can be a barrier to entry to new investors if you don't have a lot of money. And I'm going to touch on some better options later if you are trying to invest with $0. So as you can see here, certain funds you might need a minimum of anywhere from $3,000 to $10,000 to invest in. The platform is definitely very basic and it can be a little bit hard to navigate sometimes. It's a little clunky and confusing. Vanguard is definitely great for if you have long-term goals and you just want to park your money in, let's say, an index fund or set up an IRA. I personally have a brokerage account with Vanguard where I invest in VTSAX, which is a total stock market index fund, and I can expect it to get me around 10% annually, and it's got only a 0.04% expense ratio. And you see here, its best year, it actually made 33%. So you're going to get around 10% annually. And if I were just starting over now, I would be investing only in an index fund like VTSAX. This helps you build a strong base and limit your risk. It builds you a great foundation and a diversified portfolio as you'll be invested in the entire market. So next up, I'll talk a little about Robinhood. So Robinhood's very basic and easy to use. They're constantly adding new features. You can now buy fractional shares and even ETFs. Robinhood was historically the only one with no commission. The other brokerages have adopted it now. As you can see, it's easy to use. They've got news. They've got these cool lists. You can see the 100 most popular stocks. So Apple, Tesla, Ford, these are the most owned stocks on the Robinhood platform right now. So it kind of gives you an idea of market sentiment. And perhaps the coolest part of Robinhood is you can get a free stock just for signing up. There's no catch to this, and so this is a great way to get started if you don't have any money to invest. All you have to do is send this link to whoever, and once they create their account, you'll get a free stock and they'll get a free stock. So I'll put this link in the description below. You can use mine and you'll get a free stock. Here's some of the stocks I've gotten. I mean, I've gotten Fitbit, Sirius, got a couple of shares of Snap. I mean, we're talking about free money here. This is hundreds of dollars. So even if you have a lot of money, I mean, and you want more money, or you want to use this as a way to get started, I mean, you can do whatever you want with these. These are your stocks. You could sell them then and buy other companies, or you can hold on to them and see what happens. So definitely a great way to get started. I'll link that in the description below. So last but not least is Fidelity, and this is the brokerage that I use the most now. It's great because it's very easy, it's simple to use. You have this little search bar on the top where you can search for anything, any questions you have. You can easily reinvest your dividends, set up a drip plan, and it's also great for if you want to keep everything organized and in the same platform. I have a brokerage account and a Roth IRA. You can have multiple accounts all in one place, so you can see all of your assets together. So a quick little summary. All three platforms have commission-free trades now. Robinhood is definitely the easiest to use. However, it lacks extensive features, and it's not as reliable in the sense that there were some crucial days where the market was making big moves and there was too much traffic on the Robinhood servers, so they crashed. So a lot of people lost money because they weren't able to get their money into whatever they wanted to or take money out, whereas Fidelity and Vanguard are good old reliable. Now, Fidelity is my favorite, and they currently offer many index funds with 0% commissions, which they launched to try and compete with Vanguard. However, they could change this at any time. So Vanguard is your OG for true and tested index fund investing. So which brokerage is right for you? I've used Robinhood. That's where I got my start with investing, but now I primarily use Fidelity and Vanguard. They all have their benefits, and it's really going to come down to what kind of investor you are. If you want to take a passive approach to investing and you only want to buy index or mutual funds, then Robinhood's probably not the best pick, and I would stick with Vanguard or Fidelity. However, if you do want to dabble with individual stocks, Robinhood is a great place to get started. As I said, that's what I did. It's got a very simple layout and it's super easy to use. You can also get the free stocks just for signing up, which you can get by clicking the link in the description below. And the nice thing about Robinhood for me was always the commission-free trading, but since many other brokerages have now adopted this, I primarily stick with Fidelity and Vanguard. With Fidelity and Vanguard, you're going to get a lot more features, access to a lot more index funds and mutual funds. You can set up retirement accounts like an IRA or a Roth IRA, or if you want to be organized and keep everything concise, with Fidelity or Vanguard, you can have all your accounts in one place. Now, if I were starting over my investing journey today, I would definitely buy a total market index fund first, like VTSAX or FSKAX. This gives you a solid base and sets you up for long-term success. Now, keep in mind, index funds are for long-term investors. You should only invest money in them that you expect not to touch for 5 and 10 years at a minimum, because from year to year, anything can happen in the stock market. It may go down in the short term. In regard to other investing apps like Stash and Acorns, which you might have heard of, I think these are cool concepts, but in my opinion, you're better off sticking with brokerages. If you want to learn more about these other options, for example, with Acorns, you can invest money from every transaction that you make. So every time you swipe your card, it rounds it up to the next dollar and invests the change, which is a good way to get started and saving money without even realizing it. If you want to learn more about these other options, let me know in the comments below. If you learned something today, smash that subscribe button and stick around for the rest of the Investing for Beginners series. Also, check out my other videos where I analyze specific companies. This is Vinny from the Investment Club, and I'll see you next time.